morning, everybody. It's Wednesday, February 7th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll get to those during the show. Quickly here, overnight markets had March corn down 5 at 433 3/4. March soybeans were down 15 3/4 at 1183 3/4. And March Chicago wheat was down a penny and a half at 593 1/2. Fellas, looking at everything here this morning, one thing to note, after yesterday's settlement, the current crop insurance averages for corn and beans for February are 477 3/4 for corn and 1177 3/4 for beans. So we'll continue to average those out here as we go through the month of February and keep you posted on what those numbers are shaking out to be. Saw a big drawdown in corn open interest overnight, down a little over 21,000 contracts. I know, Dustin, you had some thoughts to kick us off here this morning, and we can build on that.
Yeah, so open interest dropping into a bear market for corn. And we're also seeing the spreads drop quite dramatically all of a sudden as well. So March DEES is making new lows. July DEES is making new lows. What we think we're seeing is that last half of the delivery window for JFM, where growers are starting to actually sell the futures of their contracts, right? So a lot of basis only contracts had been established, as we talked about, through harvest and also early part of January. I think getting past those Jan reports and seeing that South American rains did come for Argentina and Brazil, a lot of people just have the wind out of their sails and they're starting to capitulate. They're starting to sell. So what the function would be is if the commercial is already holding the long on their end, right? Because the buyers already come for it on the outlet of that for the elevator, for example. As the grower comes in with the sale, it actually closes the two contracts and the open interest drops at the commercial. We'll wait and see if that actually is happening on the COT report. But that would be our initial guess of what's happening and why open interest is dropping in a bear market.
It kind of falls along the lines. I mean, I know we talked to a number of commercials, across the country in our everyday dealings, and I think we've started to hear more, straight farmer selling versus using whether it's basis contracts or things like that. So, to your point, Dustin, I think that could be some of the contributing factor to seeing that. And certainly seeing the weakness in the cash markets for sure.
Yeah, absolutely. Yep. I think the farmer is the largest participant, really, right? And so there's been a lot of estimates that there has been an undersold farmer coming into this year. There was pretty high conviction with problems in Brazil as well, that they might have some problems that give us a price boost again. And I think that we're getting kind of past that stage where reality is kind of set in, and a lot of growers are saying, I'm not going to do a basis contract because that was the wrong decision for the last 45 days. I'm just going to sell and move on, maybe re-own with a call option or something down the road. I think that's what the market is saying right now, and that's why you're seeing the spread break all of a sudden.
Yeah, that's good stuff. Johnny, I know you've been watching a little bit of the dollar index and how it's traded the last, month or so. Just some thoughts there. I know it's been down the last couple sessions, but overall the trend's been higher. Is that right?
Yeah, correct. Thanks, Dan. Yeah, I mean, we are, since I think it was Monday, have been the highest we've been since 2 weeks before Thanksgiving. So obviously doesn't bode well for us, but something to keep on an eye on currencies as well. And then to Dustin, we also start the Goldman roll today, so that should probably add some pressure on spreads as well. So.
Yeah, and Dustin, real quick, you want to highlight for folks that may or may not be familiar with Goldman roll, how that process happens there.
Yeah, so they have a structured roll period where they have to roll their position between the 5th business day of the month and the 9th business day of the month. So if they're rolling long positions, then we will technically see a sale come in sometime during the day in the March contract and a buy into the May contract. Deutsche Bank rolls on a longer term scale. Goldman's month to month, as I understand it.
Oh, very good. Other notes this morning, and I think this could be contributing to just some broad-based commodity weakness as well. Is there's reports that Putin is slated to visit with the Turkish foreign minister to talk about alternative routes for getting Ukrainian grain, through the Black Sea. And so, I think it's just more ways to move international grain. Certainly not sure that's the overriding reason that we're lower here this morning, but just another contributing factor and more headwinds that we're facing. So we'll have to keep an eye out to see how that shakes out. And more and more reports on the concern over some of the statements that former President Trump made on Saturday on this 60% tariff deal. I think it's garnering more and more steam. We talked about it a little bit yesterday. The Chinese officials are meeting with U.S. officials and trying to get a gauge of, is this really the path we're going down, and trying to work through that. So, the concern is there. And I think that's something that the market is, possibly starting to look at. Any thoughts on that, guys?
Yeah.
Yeah.
Go ahead, Jason, actually. Yeah.
No, my only comment, obviously it could wildly affect our grain prices, right? I mean, obviously everybody remembers the last trade war. And we were, the ag industry was directly targeted. That's our biggest weak point, as far as China sees it. They they don't necessarily like to do it either, right? Because they end up having food inflation and things over in their country, but that's kind of, that's their tool to fight back against us. Right now though, it's at a bad time for China, it looks like, right? I mean, they're going through a really, really weak economy. They're going through all these problems with the real estate, and then talks of, massive tariffs coming in a year from now. I think just has money flowing out of that country, right? And that probably is why we're seeing a lot of strength in the dollar as well. I would think just money moving back into, what's conceived as a more secure economy, a stronger economy, the reserve currency of the U.S. dollar. All that is all that is probably what's happening. Outside of that, I don't have any predictions on how that's going to play out,
Right.
but I guess it makes sense.
Yeah, I mean, if I'm them, I would be concerned, with the state of, we're not going to get political here, but the state of our politics and the way that things are shaping up. Like, I think everything's on the table, and you can't downplay the importance of them as a trade partner. And I think they are starting to realize it as well. That if that gate closed, boy, that could be a serious demise for them. For all the points you listed, right? I mean, it could just be catastrophic, really.
Yeah, it's bad for us, but it's way worse for them, I would think.
Absolutely. And it's and who knows how that shapes out with MFP payments and things like that. I mean, last time that we went through a scenario like that, we did support the American farmer to a degree. With different programs and things like that. So, no, it's interesting to watch out. I think the other piece that I was looking at here this morning is just the continued lobbying on this EV deal out in Washington. You've got national corn growers and different folks that are now starting to speak up pretty sharply on these electric vehicle mandates, if you will, for, what was it, 2030, right? They're starting to get more steam, and there's a big petition that was signed, and so that's really taking the forefront. I noticed that Tesla stock was actually getting beat up a little bit, so I'm not sure if any of that's news of what's going on, but just some things that are shaking out for our markets here.
I think on Ford's earnings, I think they said they lost 1.4 billion on their EV sector.
Is that right?
Wow. Their stock was up, so overall they did good, but their this EV story We'll see. Obviously, Tesla is a much different EV company than all the major manufacturers. I mean, they're making a really solid margin on all the cars that they make. So they're vertically integrated, much more so than a Ford or GM. They're
Sure.
obviously the big guys are trying to get into the space, but they're not doing a very good job of it. So yeah, I don't know if it continues. It seems like they're going to keep pushing forward until they can figure it out. It's definitely the path they're taking into the future as far as they see it. But right now, it's a painful road. It seems like so.
That's a good point. And just piggybacking on our last thing that we were talking about with China and tariffs on grain or things of that nature, like you have to believe that a change in administration is going to also be a change in philosophy from some of those mandates, right? I think so. That's probably what some of these companies are looking at as well. Trump screaming drill baby drill is not necessarily gonna saying that we're putting every car on the road to be electric. I think he's been pretty firm in that stance as well.
Yeah, but one thing we're doing though is like the renewable initiative for airlines, right? So there are some positive things that are going to be a very high usage that are being pushed as well. So even if we kind of go down that path, I think that they are shifting toward obviously renewable diesel and then jet fuel. So there's still some positives on that front that I would say I wouldn't think that the market's actually trading the EV problem just yet. Maybe once you get out into the far deferred contracts, but I don't think right now.
Yeah, that's a good point. Ryland, let's talk a little bit of cattle here as we got a couple minutes here this morning. I know been pretty friendly, but what any more forward guidance for us?
Yeah, well, I mean, we've really just exploded past couple of days pretty much since the inventory report. Cash has been no cash trade has been really developed this week, but that's been pretty positive. There were no deliveries against the February contract. We made new highs for the move in the feeders and on the live side. So we're just putting on a lot of what we took off here. It feels like a brand new market though, which is kind of interesting. We've been slowly seeing the funds start to get back on board, but yesterday was a little bit different. Open interest was down a little bit in the live cattle, about 1,900 contracts. So maybe we're finally starting to get the shorts to run for the door. I mean, there's nothing bearish about the cattle market right now. I think the only kind of detriment we hit is maybe some light seasonal, highs coming in here. Some of those dates are like right around February 17th to the 26th, just potentially you see a seasonal down after that time frame. But on the other hand, February 6th was a kind of seasonal buy time frame for April feeders specifically, and that's to be held for the next 10 days. So at least at least on the open interest side and the feeder cattle side, it was up a little bit. So maybe we did see a little bit of new speculative longs kind of pop in on that seasonal date. But otherwise, there really isn't much news. There wasn't really a good catalyst for the rally or any real headlines. It just feels like we're just trying to put back what we took off really. And these are really good opportunities. We started getting a little bit more aggressive, hedging more cattle out here in April and June, and starting to get into the August and October time frames. But there's a little bit of concern because break evens are really starting to get quite higher as we get into Q4. So I think that's going to be a little bit more of a bullish sentiment that the market's going to have to pay people to expand right now. But this is way down the road. This is not going to happen overnight.
We've talked a lot about, cost of production on the row crop grain grower side. Can you give us just a little idea on the production side for cattle, and I know you threw around some numbers yesterday on terms of feeders, what break evens are generally looking like for that expansion that you're telling us we need?
Yeah, well, I mean, it kind of depends on where you're starting, really, but I think forward margins are going to be more important. And if the market really wants expansion, it's going to pay people to hold on and to hold back their cattle, and at least the structure of the board is there. But from what it seems like, break evens now getting back up there are, if just by starting off using kind of fall feeder prices, are going to be over $2. So these are prices that we've never seen before. Profitability is really good now, though. I mean, no question about it. Guys are still, very profitable levels, with the board being at 183. Cash still kind of hovering around 179. So these are good. These are really good. These are really good margins for right now, from what we're seeing. I mean, that obviously that's going to change producer to producer, but just we're a little concerned about where the market kind of would have to go on the top side if you're just using board prices. So
yeah, so I mean, like LRP products, looking at things like that to just get yourself a margin at this level with, because like any market, right? Something flips or changes, you don't want to be left holding the foot in the bill.
Well,
right?
everybody remembers what happened in September here. So, I mean, like, you see how fast you can suck a lot of premium and a lot of cash out of the market with just pure liquidation. So just keep that in mind. LRPs are kind of half the battle, but they're definitely great ways to, bolster those LRPs using products on the board as well, put spreads, three-way option trades, those kind of things. So look at those as well. I would not discount them, but it is an easy market to say, hey, get a floor and do nothing, just sell the highest price possible. I think you want to be use a little bit more sophisticated tactics than that, with us being at these kind of price level, because the risks are very high, I think, if we go up.
Oh, very good, Ryan. Appreciate that this morning, buddy.
Thanks,
Just came into the open here. We got March corn down 5 1/4, 433.5 is the last. March soybeans are down 16 1/4, 1183 1/4, and March Chicago wheat is up a half, 595.5. One administrative note: Jack is going to be in hosting tomorrow, so guys, take it easy on Jack. You guys will have a lot of fun with him. And every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time. Appreciate everybody's thoughts here this morning. It was a good conversation, and we look forward to talking to everybody there tomorrow. Have a great day.
All right, thanks, Dan.